So we need to go across to Poonam as the IIP and WPI expectations are riding high on our watch list, so to speak. Poonam, what does one expect from the trend right now?
That's right. In fact, an improving trend in terms of the IIP, at least for this month, and a slightly declining trend for CPI. In terms of the IIP, I do know that we should be seeing the new series of IIP as well as WPI today in the evening. But in terms of March IIP, it's likely to rise 2% versus a contraction in the last month, and the consensus range is right between a contraction of 0.4% to 4%. But all eyes, of course, would be on the new series, and do know that now with the new series that we should be seeing in evening, IIP, CPI as well as WPI would be on the base of 2011 to 2012. There is a possibility of inclusion of LED TVs, smartphone, laptops, etc. in the new IIP series, but the divergence between the IIP as well as the GDPI is unlikely to go, and hence that entire dilemma in terms of what are the leading indicators in terms of the GDP and the measurement in terms of GDP, that still remains. IIP would still remain to be fairly divergent with the GDP. We also spoke to Pranab, and in fact he stated that almost certain that IIP under the new series would also be showing a higher industrial growth, so that should be keenly watched out for. Construction is unlikely to be a part of IIP, and the new WPI series, which would be seen today, would be fairly interesting. But coming on to the March IIP expectations, it's likely to rebound versus a contraction in the last month, and led by mining, electricity as well as manufacturing expansion. The mining should be expanding nearly around 5.5% on account of better coal as well as natural gas production within the core sector industry. Manufacturing is also likely to be fairly positive, and electricity is likely to rise as well over around 5% odd mark. The core sector, within the core sector, the electricity did show a gain of nearly 5.9%. Capital goods may still remain fairly volatile, but consumer durables may be slightly positive. If you look at the core sector industry also, this data was fairly high at 5.9% for the month of March. Nikkei also improved to a 5-month high. In terms of the entire CPI, yes, there is likely to be a declining trend. It's likely to decline to 3.2%. The consensus range is right between 3 to 3.8%. It's likely to be partly easing on account of base effect. Vegetable inflation may rise on a month-on-month basis, but on a YOY basis, we may still see a decline. Pulses as well as cereals is likely to moderate. In fact, pulses contraction may continue, and the core CPI is also likely to ease close to 20 to 30 bips on a month-on-month basis. But most of the economists again still expect RBI to hold on to the rates, and that is exactly what the markets have been watching out for. But if you look at the yield, it's steady going in terms of the yield, and rupee also has gained for a second session in trade. So a slightly better IIP and easing in terms of the inflation as of now.